Hello, my name is Eddie Tofpick. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London, UK feed wheat. Paris milling wheat. In late May, prices moved down and away from arguably the most difficult overhead congestion on my daily chart between 267 to 270, where the market was capped and turned into a V-top. Prices headed lower within a June-based, quite acute bear channel, exiting out of the gold long moving average, currently at 225, with the nearby influence from the significant supports at 227, and now the flatlining medium moving average, currently 235. The bright red neckline extension of the June to November 2023 head and shoulders top also, currently at 236, and under the overhead congestion between 238 to 242, containing the March 2013 high at 240. Of all these, the two most important were and are the bright red neckline extension and the gold highlighted long moving average. Looking below, I said 9 weeks ago, and I quote, an obvious area of support is further below, starting at the 50% absolute Fibonacci line at 219 and mainly centered around the old descending triangle and bullish halfway hesitation from April between about 213 up to the 50% absolute Fibonacci line. However, I only point this as an obvious point, not necessarily a strong support. End of quote. The market had in recent weeks hesitated, dipping, then pulling back up and initially forming a late June to date bear channel. For this reason, I said 7 weeks ago, and I quote, V-tops such as this one here sometimes form a handle or sideways action, usually a pennant or a bear flag, on the way lower. Sometimes this is very rare they form a flat rectangle. End of quote. Till recently, I thought the extension would be some such pattern, but instead prices created a dark blue bear channel, currently 206 to 226, that is verging on being a dark blue expanding descending wedge pattern. Last week I even thought part of this pattern, the most recent part, would morph into a possible mid-July to mid-September descending triangle, with the base on the May 2023 low at 221. This has also turned out to be true. And in the middle of last week, prices shot lower, with oddly enough a small descending triangle that you can just about see on my daily chart from the middle of last week until the middle of this week now. Now, before I deal with the downside opportunities of the descending triangle, I'd like to recognize that the pressures in any V-top with an extension will be for lower prices. As I said last week, and I quote, this is what we needed to look out for in the immediate future, especially on any potentially significant move below the May 2023 low. End of quote. I carried on last week and I quote, this week we have had a gapping move lower, below the May 2023 low during the course of this week, and even below the 50% absolute Fibonacci line at 219. There has been enough for me to lay out some potential targets below for the descending triangle. Thus the primary target X will be down in the 212.5 zone, with secondary hardest reach target X1 down in the 204 even zone. End of quote. This week prices dropped down enough to reach target X, dipping further and closing below the congestion at 211. Below we now have the lower bear channel line currently at 206, and then nothing much else until the congestion zone between the July 2021 low at 192 and the congestion at 190. Getting down there would also fill in a changeover gap from mid-March between 197.75 and 204.25. I would watch carefully any confirmed break below the dark blue lower bear channel line. Minneapolis wheat. My apologies for the bright red labeling on my daily chart. My charting package sometimes throws a wobble and does this sort of thing. There is no special significance in the red labeling. So back in late February 2023 and especially at the start of April last year, so that is now outside the parameters of my daily chart, the market constructed a large bear channel that morphed into what is now on my daily chart, a descending expanding wedge pattern, currently 685 to down off the bottom, well off the bottom of my daily chart. The upper trend line is currently escorted and reinforced and has been for some time, though not very well recently I have to say, by the declining long moving average. That's currently at 678. I've kept this breached, large, original descending wedge pattern still on my daily chart as the others that were here, originating from August, September and October 2023 through to April 2024, that sat as just so many Russian dolls within Russian dolls have all been thoroughly broken, and this largest one is still here even if it was breached, just in case. Going back to the market action, prices turned low with a V-top at the end of May, heading lower in a very narrow and acute bear channel. The market exited out of this pattern at the start of July, held up by a combination of the October 2018 high at 611 and the April 2021 low at 606. And most importantly, on approach to the green highlighted September 2019 to date uptrend, currently at 532, which held things up despite not directly being tested. During the course of being held up, the market created a small horn bottom, but more importantly a larger pattern. Initially the pattern looked, and still does more or less, like a sideways expanding wedge pattern, currently 583 to 661, and it's highlighted on my daily chart in dark blue. However, within this expanding wedge pattern, the market also created a cat's ears pattern over July. Now, for those of you who are unfamiliar with this pattern, a cat's ears pattern is in essence a type of double top pattern after seeing a significant decline. So a decline, double top, such as we saw actually in June. What has finally triggered this pattern has been this week's push below and close under yesterday the neckline of the cat's ears pattern at 596, as well as below the green September 2019 today uptrend that is just under it. This has been enough to lay out a potential below for the cat's ears pattern of target X in the 546 zone. Now, looking below, I said last week, and I quote, "This green uptrend is perhaps the most crucial of all the support levels, as below we really don't have that much support until the December 2020 low at 542. It also ties in what ultimately is likely to be the big picture pattern here, created since February, so for about the last 5 months. You see, this whole action has been an inverted diving board pattern that morphed into a V-top with an extension since late June. This extension has so far taken the shape of an expanding wedge pattern, highlighted in dark blue on my daily chart." End of quote. So you can see that it all ties in together, and that is even before I even consider today's actions of the market breaching the dark blue lower trend line of the expanding wedge pattern and the implications for potential targets below for this pattern, and also breaking below the 579 support. London UK feed wheat. I'm really sorry this chart is so colourful, but there's a lot going on here in a relatively narrow range. Okay, so the extension of the neckline of the May to June 2023 reverse head and shoulders bottom, currently at 195.45, is an important recurring dynamic level on my daily chart. Helped cap prices in early May, eroding the bullish incentive, such that the market was ultimately capped later on in May by the August 2021 high at 199.20, the 2013 March 2013 high at 205.05. All together, these created a V-top pattern with a very sharp downtrend slope that became, and here's the leap of faith I'd previously asked you to make, and do so again this week. The V-top became a V-top with a ghost extension that was caused with the changeover in early July. The construction of the second part of the V-top was a very late May to late June, very acute and narrow bear channel. This bear channel overcame all the congestions on the way down except the one at 164.95, just above the combined lows of July 2021 and May 2023 at 164 even. This congestion, along with, I suppose, I could include the nearby congestion from March to April 2019 between 161.95 to 165.75, but I'm not sure how much a part that these played here. Anyway, this congestions caused the market to exit out of the small bear channel. We then had the changeover gap, a large one, between 170.40 to 196.45, and we have created here since what initially and superficially looked like a descending triangle, but has since become a descending wedge pattern, currently 184.65 to 189.65, highlighted in purple on my daily chart. The big, and it is a big leap of faith, is to imagine this descending wedge pattern tacked onto the end of the small bear channel, and thus we would have, as we have seen elsewhere in the other grain markets, a V-top with an extension, only here in truth it is not. Nevertheless, there was potential for lower prices, possibly as far as the June low at 164.95. And prices last week tried and this week confirmed a break lower below the lower trend line. This now gives us potentials for this descending wedge pattern of a primary target down in the 180 even zone, with secondary harder to reach target X down in the 169.90 zone. As you can see, the primary target of 180 even has already been reached, with prices pushing below and closing under the green short medium moving average currently at 183.65 and the dark blue medium moving average currently 184.10, as well as the September 2021 low at 181.70. Prices have also pierced but have not closed under as yet the 50% absolute Fibonacci line at 180.5 and are doing so today once more. Below we now have the flatlining gold long moving average currently 178.70 plus the important 50% Fibonacci line of the early March to late May move at 178.25. Both of these are also close to the newly drawn bright red middle time currently 177.75 of the May to July bearish shift pitch walk. But after this we have a clear area all the way down to the dark blue lower time currently 171.5 of the significant early March to late June bullish Andrews pitchfork. This last dark blue pitchfork is the only bullish pattern, bar I suppose you could say the gold long moving average, which is flatlining anyway, left on this daily chart unless the market constructs a new pattern. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.